Internal Revenue Service IRS tax news. IRS reminder. Deadline postponed to July 15th for those who pay estimated taxes. IR-2020-117, June 9, 2020, Washington. The Internal Revenue Service reminds taxpayers that estimated tax payments for tax year 2020 originally due April 15th and June 15th are now due July 15th. This means that any individual or corporation that has quarterly estimated tax payments due has until July 15th to make that payment without penalty. So generally, we're talking 2020 tax year. The 2020 tax year obviously is going to be filed in 2021, but you got to make the quarterly payments. If you're an individual taxpayer, then your payments are being taken out for your federal income tax purposes out of your wages, out of your W-2 wages. However, if you have a Schedule C or some type of a corporation, then you will typically be needing to make the tax payments quarterly. So if you're a sole proprietor, you have your own business, you got the Schedule C that's reported on your normal tax return, then you're typically required to make the estimated payments on a quarterly basis, which means due on April here. But they've extended that. So, and if you don't do that, then typically you're going to get penalized for it, right? You'll owe the money at the end of the year, you'll pay it, but then you'll typically have the penalties related to it. So they have extended that to July 15th now. So July 15th. So that's, typically good news. So back to the text. In response to the COVID-19 outbreak, the Treasury Department and the Internal Revenue Service are providing special tax filing and payment relief to individuals and businesses. This relief applies to federal income tax returns and tax payments, including tax and self-employment income, otherwise due April 15, 2020. This relief does not apply to state tax payments or deposits or payments of any other type of federal tax. So if you're thinking about, any other kind of federal tax, or if you're thinking about state taxes, notice that this is an IRS item. This is on the Fed side of things. So you're going to have to check with your states to see what the state does and see if they're going to make any kind of similar type of things. They may well, depending on the state you're in, mirror what is done on the federal level. But the federal level, doesn't directly apply to the states in this case. Who needs to pay quarterly? So the question here then, of course, is, well, who does this apply to? Who typically needs to pay quarterly, and then who would then get the extension to not need to be paying on the quarterly basis due to and then that would need to be paying that first quarter once the deadline comes around. So back to the text. Most often self-employed people, including many individuals in the sharing economy, need to pay quarterly installments of estimated tax. Similarly, investors, retirees, and others often need to make these payments. That's because a substantial portion of their income is not subject to withholdings. Other income generally not subject to withholding includes interest, dividends, capital gains, alimony, and rental income. So the general rule here is if you're an individual taxpayer, then if you have a W-2 employee, then typically they're required to take the money out of your paycheck and pay the IRS with it, and therefore your payments are being taken out and being paid throughout the year, which is what the IRS wants. However, if you're self-employed, then the IRS has no mechanism to pressure the employer to take the money out of your payments. They have to pressure you directly, right? And how do they do that? So they're going to make you. So that's when you have to make the quarterly payments. So if you're a W-2 employee, you're making your payments throughout the year, and it's done without you needing to consent to it. I mean, it's required by the business to do that. But if you're self-employed, then of course you're required to actually make those estimated payments. And of course you have to do the estimates in order to do that. So that'll typically be when you're a sole proprietor, you have to estimate what your taxes will be and make those types of payments. So that's generally when it will happen. And just note, as we're talking about this, the benefit here was a delay in the payment to try to remove the estimated tax penalties on it, so that people, once they get going again, they can make their estimated payments. So it hasn't been, obviously the tax hasn't been removed here. They're just, you can extend the payment or pay it later, and that would hopefully remove some of the penalties and interest which would have accrued in that case. So, but obviously then, you'll still owe the same amount of tax generally at the end of the day, and it's just a later time period, a delay of the tax and extension as to when the payment needs to be taking place. Okay, back to the text. Special rules apply to some groups of taxpayers, such as farmers, fishermen, casualty and disaster victims, those who recently became disabled, recent retirees, and those who receive income unevenly during the year. Taxpayers can avoid an underpayment penalty by owing less than $1,000 at tax time or by paying most of their taxes during the year. So your general rule, you're thinking, how do I not owe penalties to the IRS? And that's generally the idea here, right? Because if they didn't penalize you, you might think, well, I'm just making quarterly tax payments so I don't end up with this big tax bill at the end of the year. But really, what you're really doing is trying to avoid any penalties that the IRS is going to be giving. Because if they were to not penalize you and you just paid the taxes at the end of the year when you filed your tax return, you'd be saving money because of the time value of money. You would be paying it later. And the IRS wants their money sooner. So the whole point of the estimated tax payments isn't to make your filing thing easier, which the IRS might also think that you're more likely to be able to pay your taxes if you pay in smaller pieces. I'm sure that could be part of the equation. But your main goal here is to avoid the penalties. That's why you got the that's why you need to do the quarterly taxes, basically, to not, so at the end of the year you're not only paying a lot for the taxes that you owe, but then you have the penalties, which is a cost from just not paying throughout the year. So the IRS, general rule, IRS wants the money as it's accruing through the year. And obviously when you're Schedule C, your question is, but I don't know how much I'm going to make. I have no idea what the tax return is going to look like at the end of the year. And that's just true. So you're going to have to base it, on last year and do your estimates in order to make the payments in order to, avoid the penalty. So, okay, back to the text. Generally for 2020, that means making payments of at least 90% of the tax expected on their 2020 return. Okay, taxes are pay as you go. This means taxpayers need to pay most of their taxes owed during the year as income is received. There are two ways to do that. So it's pay as you go. That means they want, the tax return for 2020 is not going to be filed till 2021. But the IRS wants the money as you go, as pay as you go, and they want the tax return. In a perfect world, the tax return would just be an information document. It would just be saying, hey, look, this is the taxes I owed, and I already paid them as I go, and I paid them all. And in the real world, that's impossible because the tax code is way too complicated. It's not just a flat tax. We don't know how much we owe until we do the tax return specifically. So in practice, then, we have to do our best guess, pay as you go, and then hopefully have a small payment or a refund at the end of the year. That's how the IRS would kind of envision this thing going, because it's not a perfect world. In a perfect world, remember, it would be just an informational return, kind of like your quarterly tax returns for payroll. You would just be saying, hey, this is how much I owed. It's a flat tax. I calculated it. I paid it. Here's me paying it. It is what it is. But the corporate tax is, again, so complicated. There's so many factors that you can't possibly know it exactly. But they still want their money as you go, even though that's the case. So back to the text, there are two ways to do that: withholding from pay, pension, or certain government payments, such as Social Security, and or making quarterly estimated tax payments during the year. So obviously the two ways, typically, if you're a W-2 employee, they're going to be taking the money out of your payment. If you get Social Security, then you could request that they take some money out of the Social Security. And in the case of a W-2 employee, you're required to do that. The employer's required to have you fill out a W-4 to do that. In the case of Social Security or something like that, then you need to be more proactive and say, I'm going to have this amount that's going to be removed, or you can make the quarterly tax payments. So the quarterly tax payments means that you're actually writing a check to the IRS quarterly, which is more painful to do, to actually write them a check. You're like, but you're paying it just 4 times a year as opposed to, if you get paid every week, then the IRS is getting the money sooner. You can hold on to it a little bit longer, possibly. In other words, if you were to pay quarterly and given the time value of money, that could be a small benefit or whatever. But in any case, back to the text. The tax withholding estimator. If a taxpayer receives salaries and wages, they can avoid having to pay estimated tax by asking their employer to withhold more tax from their earnings. To do this, they would file a new Form W-4. So if you're a W-2 employee and, for example, you said last year you owed money. Why did you owe money? Possibly because you work for more than that one company and you have wages that are coming from somewhere else. You've got investment income or something, you owed money, and you want your employer, your W-2 wages, to cover whatever taxes. You'd like a small refund at the end of the year rather than owing money at the end of the year, and you certainly don't want penalties on it, right? So you can then ask your employer to withhold more. Now, when you ask your employer to withhold more, they will not typically tell you anything, give you any advice whatsoever on how to withhold, because they're advised not to. It's not good, practice for. They're not supposed to give advice on that kind of thing, typically from a human resources perspective. So that means that you're gonna have to kind of figure out for yourself, and then use your W-4 here to tell them, I would like you to change your withholding. So when you go to your employer, typically it's not you asking them, well, should I increase or decrease my withholding, is the point I'm trying to get to, because they typically aren't going to give you the advice, which they negotiate. You really want to go to your tax preparer and or online to figure this thing out, and then fill out the W-4. And then when you go to your employee, the conversation is more of just telling them what you have decided rather than getting advice. Here's my W-4. I've updated this. This is what I'd like to do. And then they should be able to process it through. So just most people will ask the human resources, what should I do from a tax perspective? And they'll get the typical answer that we can't give you advice on that. So in any case, so back to the text. If a taxpayer receives a paycheck, the new and improved tax withholding estimator, and there's a link to this here. This is actually a pretty neat tool because it can actually help you to do estimates even most of the times if you want to do a projection on how much tax you owe and whatnot, then you need tax software or a tax preparer or something to help you with that. But this tool is getting pretty close to being basically a tool that can be used to just make good estimates on your taxes and do projections and whatnot, what if analysis maybe. But in any case, it can help you with the taxes you would owe, and then if you have W-2 wages, how much needs to be withholded from your W-2, and therefore what you need to do in terms of the W-4 to tell your employer how much that needs to be withheld. Okay, back to the text. Can help them make sure they have the right amount of tax withheld from their pay. The tool is now more mobile friendly and replaces the withholding calculator on IRS.gov. The tax withholding estimator offers workers as well as retirees, self-employed individuals, and other taxpayers a clear step-by-step method for effectively checking their withholding to protect against having too little tax withheld and facing an unexpected tax bill or penalty at tax time next year. How to pay estimated taxes. Form 1040-ES, there's a link to that here, estimated tax for individuals, includes instructions to help taxpayers figure their estimated taxes. They can also visit irs.gov/payments. So the form 1040-ES is an estimated tax form. You can find it on IRS Gov website. If you look up the forms, you can go on the irs.gov website, type in form 1040-ES. If you look at the instructions for the 1040-ES, so they'll typically be the form and then the instructions. If you look at the instructions, they'll have another thing that could help you with an estimator, a calculator, which would be a similar kind of thing to the estimator tool up top. So you might want to, play with both of those things and see what you think of them. And that could be another resource you can have to help you with the actual making of the payment. It's going to be kind of like a voucher slip, looks kind of like a voucher slip, and can help you with the calculations as well. Back to the text. They can also visit irs.gov/payments. There's a link to that here to pay electronically. IRS offers 2 free electronic payment options where taxpayers can schedule their estimated federal tax payments up to 30 days in advance with direct pay, or up to 360 days in advance with electronic federal tax payment systems. So there's links to that here if you want to do it electronically. They got the direct pay link, and they have the electronic federal tax payment systems, the EFTPS link. IRS.gov assistance 24/7. Tax help is available 24/7 on IRS.gov, IRS.gov. The IRS website offers a variety of online tools to help taxpayers answer common tax questions. For example, taxpayers can search the interactive tax assistance, tax topics, frequently asked questions, and tax trails to get answers to common questions. There's links to all those resources here, and there'll be links to this in the description. More COVID-19 information. The IRS will post frequently asked questions on irs.gov/coronavirus. There's a link to that here, and we'll provide updates as soon as they are available.